I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Thursday, March 27th. The major indices finished Thursday with steep losses and volatile trade. A disappointing report from a tech bellwether and continued concerns over financial companies drove the market lower. The stock market ended the day near its lows, sending it into negative territory for the month. Oracle reported third-quarter non-GAAP earnings rose 23%, which met analysts' expectations. However, its stock got clipped 7.2% after the company reported revenue that was just short of estimates and said on its conference call that customers were a little more cautious at the end of its quarter. Disappointment over Oracle's view on customer behavior weighed on the tech sector, which declined 2.4% and finished the day as the main laggard. Google also got hit on reports that its most recent pay-per-click number was weak. Also fueling selling interest in that stock was news that Lehman Brothers cut its price target for Google to $580. Following the completion of the Fed's first term securities lending facility auction, the Fed said it will be lending $75 billion for 28 days. The bid-to-cover ratio came in at 1.15, which is the volume of bids divided by the funds available at auction. The stop-out rate, which was the lowest rate the Fed accepted, was 0.33%. The auctions stand to improve liquidity by lending financial firms highly liquid Treasury securities in return for less liquid assets as collateral. The stock market's initial response to the auction results was positive, as the low stop-out rate was seen as an indication that primary dealers were not desperate for the loans. Sentiment soon soured, though, as the market fell to its session lows. The financial sector had a volatile day, trading up as much as 0.9% and ending the day at its low with a loss of 2%. The sector was a laggard for most of the session due to negative rumors regarding Lehman Brothers and a number of earnings estimate cuts. Oppenheimer shaved its earnings estimates on Merrill Lynch and UBS. Lehman Brothers, for its part, cut estimates on several banks. Some of the bigger names on the estimate chopping block included Citigroup, Bank of America, and Wells Fargo. Interestingly, there was not a Treasury market flight to quality as stocks fell. However, defensive-oriented sectors such as utilities, healthcare, and consumer staples outperformed on a relative basis. Economic data today were better than expected, but that was not enough to stave off selling pressure. New unemployment claims for the weekend on March 22nd fell to 366,000 from 375,000 in the prior week. That was slightly better than the 371,000 claims economists expected. Separately, final fourth-quarter GDP was left unchanged at 0.6%. However, consumption was revised higher to 2.3% from 1.9%, and the price deflator was revised downward to 2.4% from 2.7%. In other words, the numbers showed better than expected spending and lower than expected inflation. In commodity trading, crude oil extended Wednesday's steep gains. The commodity ended the day up 1.2% at $107.21 per barrel on news an attack in Iraq caused a pipeline explosion. As a whole, the CRB commodity index advanced 0.7%. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.